Hi, everyone. As the giant sign pointed out, I'm Eyal, Sivan, General Manager of North America for Ozone API, a firm out of the UK that specializes in turnkey open banking solutions for data providers. I'm also known as Mr. Open Banking from my podcast of the same name. We are now in season 6. I've had the good fortune of speaking to some of the builders and innovators who are making open banking a reality all around the world. We now have over 100,000 listeners across the globe. And I'm very proud to say that 2 of the esteemed guests that are joining me here on the stage, Abraham Tachian from Canada and Don Cardinal from FDX in the US, bring down the echo a bit, were on my show. So I'm very thrilled to be back in Mexico addressing you all today. I'm here to talk about how to create a sustainable open finance ecosystem here in Mexico, because now is the time. Open banking is a reality all around the world. I am going to spend a bit of time talking about the basics, but I want to leave you all with a blueprint. Like Edgar said, a roadmap of what can be done today to bring open banking to Mexico. Open banking is forever changing how we interact with our money. It's fundamentally revisiting the relationship that we have to our financial information and the money that that financial information drives. But let's start from the beginning. What exactly is open banking? A lot of banks out there, maybe some in this room, like to say, well, I do APIs. I know what APIs are, so I do open banking, right? The fact is that banks have been doing APIs since the dawn of computing, since the 60s, and they were called APIs even back then. So no, sorry, just because you do APIs, you don't do open banking. You've been doing APIs forever. That just means tying 2 computer systems together. Even when you talk to a partner and you have some special project to get your systems to talk to each other, that's not open banking. That's just good old-fashioned APIs. Over the course of the last couple of decades, in and around the 2000s, 2010s, a lot of banks introduced developer portals. And they took those APIs that used to be all internal, and they made them external. And they put them inside developer portals. So you'd go to developer.bank.com, and you could find external APIs that any developer could come and sign up and use. Now, that's a major step towards open banking. And some banks like to say, I've got a developer portal with externally facing APIs, and developers can come and build things on those APIs. I do open banking. No, you don't. And the reason that you don't is because open banking only exists when you introduce the idea of common shared standards. Standards that no one owns, that anyone can use, much like the standards that drive the internet today. And the entire ecosystem runs on these common standards. So whether you're a big bank, small bank, fintech, credit union, the way that you share data works the same way. If you need account information, I'm going to move this thing. Help me out in the back with the echo. Whether you're a fintech, credit union, large bank, small bank, you share data the same way. Whether you need to get account transactions, whether you need to do thin file adjudication, whether you need to do PFM, it works the same for everyone in the ecosystem. That's what open banking is really about, the introduction of common shared standards for the secure exchange of financial data. Now, what exactly is open banking trying to achieve? First and foremost, it's trying to achieve increased competition, leveling the playing field, allowing more entrants to join the financial ecosystem and introduce products that compete with incumbents. But it's not just about competition. That brings me to the second pillar, and that's innovation. It's not just about having products that are cheaper, more attractive, more even suitable for a particular audience. It's also about introducing products that before simply did not exist. Entirely new kinds of accounts, entirely new kinds of loans. That's the second goal that open banking strives to achieve, innovation. The third is transparency. It's not talked about enough, but it's a crucial goal. Transparency such that it's easy to find out what the different terms and conditions are for products from different providers and to be able to compare them easily. That transparency is key to driving the other 2 pillars, competition and innovation. Why is this all happening all around the world all at once? Well, it all starts with these things that you all have, that everyone has. Maybe you have too. Those little devices that we carry around in our pockets fundamentally changed our expectations for how we engage with providers of all stripes. Whether it's ordering a cab, ordering a pizza, or doing our banking, we expect to be able to achieve what we need with a few taps on our phone. The second reason open banking is happening is because of the emergence of fintech, and not just fintech lowercase f, but uppercase F from the GAFAs, the big four. This isn't just about two kids in a garage who've come up with some idea that's maybe sort of kind of a threat to JP Morgan and maybe they'll get acquired or something. As you all know, Google, Apple, Facebook, Amazon, and other big tech firms are moving in earnest into financial services. They are not kidding. They're trying to reinvent money. They're trying to reinvent credit. And they are a lot bigger than the banks. Even firms like JP Morgan are small by comparison. So when they started to join this game, the banks, thank you, the banks started to say, whoa, time out. We need some rules. We need to come up with some guardrails. We need to come up with a way to make sure you don't completely take over all of finance and all of money. The third major reason is rules and regulation. As these other two drivers took speed, you saw around the world the emergence of real laws that said, okay, here are the rules. This is how we're going to securely exchange data. This is how we're going to introduce common standards. And all of these factors are what is fueling the rise of open banking all around the world. So what is open finance? You've heard this term introduced earlier by Fernando. Open finance simply means the expansion of open banking into areas of finance that are not just retail banking, so things like wealth, investments, insurance, and so on. Most mature open banking regimes are already in the world of open finance, but where it gets really interesting is when open finance turns into open data, and this idea of consent-based secure data sharing based on common standards expands across the entire economy into things like telecom, healthcare, government, etc. That's when things get really interesting. Open banking does not stand alone. If you're a technology provider, it's important to understand that there are really three pillars that make open banking complete. There's, of course, the data sharing side, driven by user consent. But in addition to that, there is payments, the need for a real-time rail to actually execute on the decisions you can make based on the data you retrieved via data sharing, and, very tricky one, digital identity, which allows you to verify the participants in the ecosystem and the end customers who are actually participating and trying to take advantage of these new products and the ability to share their data. Who benefits from open banking? One of the things that drew me to open banking from the very beginning was the fact that it's a non-zero-sum game. Everyone benefits. It's not just win-win, it's win-win-win-win. Fintechs benefit because they have access to more customers through wider distribution. Banks win because they have access, fintechs win because they have access to more customers. That's sort of the easy one. They have access to banks' customers. Banks win because they have access to wider distribution through fintechs who can get to audiences that those banks could not get to before. Regulators win because they're protecting their citizens by introducing special rules and regulations such as accreditation, liability that allow consumers to feel safe. And consumers win more than anyone because they have access to new, innovative, more affordable, more tailor-made financial products. I am going to go over time. I'm warning you all now. This is a reality today, folks. Okay, open banking exists in over 90 countries. I think at last count, over 100 countries. So this isn't something that is in the future. This isn't something that might happen. This is something that is happening now. Some form of open finance is sweeping across every continent. And really, North America, where we are, is late to the party. Wrapped up in this question of how individual countries approach open banking is this balancing act between regulatory-led on the one hand and market-driven on the other. Some folks like to say, well, I have to choose, right? It's either market-driven or regulatory-led. That's actually not true. That's a bit of a red herring. The reality is, for open banking to work, the market and the regulator have to find a way to get along. And how you find that balance is all wrapped up in a country's culture, the relationship people have to their banks today, the kind of problem you're trying to solve with your open banking regime, be it inclusion, be it more competition, etc. This is the key to making open banking work. Not deciding, are you market or are you regulator, but finding that balance that's going to work for your country. Make no mistake, even here in North America, even though we're late to the party, regulated open banking has arrived. In October of last year, there was a landmark moment in the North American open banking space. In Canada, the Department of Finance read their Consumer-Driven Banking Act Part 2, which was the really significant part, in mid-October. This is after introducing the first version of the Act, which received royal assent earlier in the year, in 2024. My friend Abraham is going to tell you all about exactly how that happened and his key role in making it happen. Meanwhile, on the US side, the US published their final personal financial data rights rule on October 22nd, 2024. So October last year marked a true milestone in North American open banking. It's getting spelled out. It is now real. There are laws on the books. There are not laws coming. The laws exist today. They are in place. So let's kind of double click on our North American friends and see what they've been doing. In the US, you've got the Personal Financial Data Rights Rule. Depending on how you count, the year of origin is roughly 2023 when they released the draft rule. The industry came back with over 11,000 responses to that draft rule, which were then incorporated into a final version released in 2024. The regulation, sometimes referred to as just Section 1033, is based on that section in the Dodd-Frank Act, also known as the Consumer Protection Act. The rule was released, made official, on October 22nd of last year, and the next step is for rule adjustments by the new CFPB. I'm going to talk about that a little later, but a bunch of stuff has happened since the election and the new administration came into place. But the American approach, the key message here, is focused on driving competition and innovation. That is fundamentally their goal. It's not an inclusion problem. It's not a transparency problem. It's a drive competition and innovation, which is very much part of the American DNA. So what do you want to know about that law? Very quickly, the participants include all banks and FIs with greater than $850 million in revenue. That's based on a revision. It used to include all banks in the original draft, but based on feedback, they cut off at $850 million or below. The scope covers all deposit accounts and credit card accounts, what they call Reg Z and Reg E, payment providers, and crucially and uniquely, digital wallets. Good things to know is that in January, the FDX, Don Cardinal is going to tell you all about that organization, a member-driven nonprofit standards body that was officially selected as a standards body to comply with 1033. There's a lack of clear liability and accreditation rules, as well as a lack of a registry of accredited participants. Finally, the CFPB faces a lawsuit from the Banking Policy Institute and the Kentucky Bankers Association, who said they overstepped their bounds in executing the law. That challenge came out a day after the law was released. So what should happen next? Standards body FDX is finalizing the requirement set for what they call CSDF, a subset that's intended to comply with 1033. FDX also needs to establish a certification process, which is the subject of much discussion. I should add, I am a board member, so I'm very much part of those discussions. And Section 1033 must survive any revisions made by the new administration and new leadership of the CFPB. Meanwhile, in Canada, you've got what we call the Consumer-Driven Banking Act. That's after a couple of name changes. Abraham's going to talk about that as well. Depending on how you count, you can go all the way back to 2018 or even 2016, but we did officially pass a regulation known as the Consumer-Driven Banking Act, part of our Budget Implementation Act, in two parts. BIA 1 passed, BIA 2 was in the middle of readings when some political challenges were introduced to Canada as well, and I'm going to talk about those. Next step, there was a federal election. We have a new prime minister. He's got to dust off Abraham's plan. I'm going to keep referring to you, my friend, and pick up where they left off with BIA 2. So what do you want to know about Canada? Participants include the largest retail banks, while other regulated FIs are opt-in, including the credit unions. The scope covers deposits, investments, credit cards, prepaid, loans, and mortgages. The notable one there is investments. Very interesting, very unusual for a first step. Timeline remains unclear, but there is a notional live date, even with the new election of 2026. Clear accreditation rules and a public registry are in scope. They were explicitly included. Strong financial penalties for all participating entities, and liability rules that follow the data as opposed to being with the provider exclusively. And there is support, again explicitly as a principle, for reciprocal access. For those Mexican banks out there worried about, wait a minute, I don't want to share my data unless I get data back. Yeah, we know other regions have addressed that with a reciprocal access principle. What should happen next? The Budget Implementation Act needs to be dusted off. It contains the details. It should be publicly released. Concerns regarding a lack of tiered accreditation, so that accreditation isn't used as a moat, have to be addressed. And there needs to be some sort of standard selection criteria because we still don't have a standard. I mentioned some challenges. Things have not been smooth, and I want to emphasize how normal that is for open banking. In Canada, the Prime Minister stepped down, Parliament was prorogued, BIA2 was suspended in readings. I should have updated that. The federal election happened, but there are leadership changes, and this will lead to revisiting existing efforts, resulting in delays. Meanwhile, in the US, there's a new president and administration. He's not shy, and his team is not shy about how they feel about regulation. They don't like it. They don't like government agencies. So they are essentially dismantling, little by little, the CFPB, or at least attempting to. There is a BPI lawsuit that has led to, so far, a 3-month delay, may result in more delays, and there's a churning mandate at the CFPB. I'm not going to go over the daily details, but it does change daily. So the future of 1033 is uncertain, and again, leadership changes will lead to revisiting existing efforts. All this to say that open banking can be approached differently by different countries, and it's not without its challenges. So let's take a look at how those two compare to each other in an effort to learn some lessons for how Mexico can approach their own efforts. Both started with market-led activity. This is crucial. Both in Canada and the US, there was very savvy digital consumers who were already sharing data, often in unsafe ways like screen scraping. Second, FDX emerged as the dominant standard in both regions. So you have a single, member-driven, nonprofit, private standards body, driven by industry, that has become the de facto standard in both Canada and the US. Third, they're moving straight to open finance, albeit a little differently. In the US, you've got digital wallets. In Canada, you've got investments. But right out of the gate, they realized open banking, in other words, just personal accounts, or what you might call retail accounts, is not enough. You should aim higher. That's definitely a lesson that Mexico should take on. Fourth, regulations are late relative to the rest of the world. I talked about us being late to the party. And fifth, they both struggle with governance models. That's not unusual. Governance is hard. My colleagues Don and Abe are going to talk about that. So both the US and Canada are all about putting guardrails on existing consumer behavior. This is very different than Europe. Consumers were already sharing their data. Open banking was intended to put some rules around that. It was not intended to redress them. It was not about fixing banks' bad behavior. It was about really helping them do what they're already doing, but better and safer. So how are they different? First, the US has much clearer regulatory guidance. Their rule is about 594 pages. Our rule is 12 pages, 6 pages, if you consider that it's bilingual. So we've got a long way to go. Second, Canada will require formal accreditation. It's right there in the principles. We will have an accreditation process and a registry of accredited participants. For whatever reason, the US so far has decided not to include that as part of their regulation and essentially has left it to industry. Third, the US includes digital wallet providers. Fascinating. The jury is still out as to whether that applies to Google and Apple, the first names that come to mind when you think of digital wallets. You can bet that that's going to lead to a debate. Fourth, Canada supports reciprocal data sharing. I mentioned this earlier, but it's worth reiterating because I know how important it is to Mexico. That is something that is common in many open banking regimes. So if you are out there thinking, whoa, I don't want to share my data unless I get something back, this is a debate that has happened elsewhere and often results in a reciprocal access principle so that anyone who is using your data or wants to share your data has to share their data as well. Fifth, the approach to secondary use. Secondary use means if a customer has chosen to share their data, what else can the providers in the middle do with it? The US has explicitly said in their 1033 rule, no secondary use. Unless the customer has explicitly said, I am fine with you using my data in marketing fashion, packaging it and reselling it, using it to improve your own products. Unless I have explicitly said you're allowed to do that, you are not allowed to do that. Canada took a softer approach. They sort of said, we're not too fussed about that. Use it for whatever you want, because we recognize that preventing that is going to cause all sorts of challenges for existing use cases, for aggregators, for banks, etc. So the way I would sum up the differences really is that Canada has taken more of a top-down approach. They have been very strong on regulatory principles. They have been very mindful of the needs of the major banks. But as a result of this careful top-down approach, they haven't gotten very far. The US, by contrast, has leveraged the activity of a market-driven standard, allowed it to flourish, put guardrails around the market activity that already exists, and kind of rolled with it, a much more bottom-up approach that has resulted in clearer guidelines and a standard that is, frankly, a lot more mature. But, as I mentioned, facing challenges. So, what does that mean for Mexico? In my view, the time has come for Mexico to join in and chart your own course to open banking. What would Mexican open banking look like? What does it look like today? The good news is you've already gotten started. You have the fintech law today, and it goes back to 2018. I'm sure you're all familiar with it. At the time, it was hailed as the most forward-thinking, most advanced regulation in the space for all of Latin America, and frankly, all of North America. I mean, at this time, Canada and the US were doing basically nothing other than talking, and I don't know where Don is, but not to degrade from the market work being done by FDX, but there wasn't really anything in terms of finding that balance between the regulator and the market. The regulation is the law for the regulation of fintech institutions, financial technology institutions. It's a bit of a mouthful, so I abbreviated it. But there is a law on the books. I was looking at it earlier this morning. I think it's something like 200 pages and quite thorough. And as it states in that law, the next step is to establish a supervisory commission that is purpose-built to implement this law. Canada has been there. Abraham's going to talk about that. In the law, it talks about implementation of that supervisory committee within 2 years. That was 2018. So there have been, needless to say, delays. A lot of those delays come down to what I talked about earlier. How do you find that balance between market-driven and regulatory-led? How do you find that balance between the central bank, the Ministry of Finance, the Securities Commission, all of which are responsible for different parts of the Mexican financial ecosystem? The third one, of course, was the one that is holding the reins right now for the fintech law, but as we mentioned, there have been delays. And then on the other hand, you've got the top banks, who of course are very careful about how they approach this and need that guidance from the regulator before they do very much. That's part of that culture of Mexican banking that I said would play a key factor in this balance. The Bank Association, right, ABM is representing the banks and their interests, and then you've got the fintech side as well, the Mexican Fintech Association, which is very vocal about their support for open banking and has been for a long time. So how do you find that balance? When I talk to my Mexican friends about how to do this, where they are and where they're getting stuck, it seems like the issue is not support for open banking in principle. I mean, here you all are. This event is more than double the size of last year's open banking town hall. There is clearly a broad recognition on both sides that open banking is a good thing, that there are benefits for Mexico. The challenge is, where do you start? We're here to help. So, this is an attempt to put together the beginnings of an architecture. Admittedly, a high-level strawman architecture, but a beginning. On the one side, you've got demand, the data recipients. On the other side, you've got supply, the data providers. They are the two sides of the open banking coin. The question is, how do you bring them together? Data recipients are folks like Mercado Pago, Spin, Oxxo, even Nubank. But I want to stress that this is not a black and white thing. A lot of the banks that might think of themselves as data providers only are going to be the biggest beneficiaries, the biggest data recipients, especially if you introduce a reciprocal access rule. That's part of how this goes in other regions. So don't think that just because you're a bank that you're not going to be a recipient. You are. Likewise, on the data provider side, you've got folks like BBVA, Banorte, Santander, the other big banks. But again, if you're a fintech, don't think, well, I'm just going to be on the receiving end. Think of yourself as a provider, and don't think about that as a threat. Think about that as an opportunity. If you are a provider on the fintech side, how can you get your products into places that you couldn't get to before? How can you show your product in a BBVA app? Right? There's amazing opportunities for players on both sides. The other good news for Mexico is you've got a ton of activity that is already moving in that direction. You have credit agencies who are all over APIs, in particular Circulo Credit, who has a thriving API strategy, APIs available today, and insurance companies coming together, credit agencies coming together to define standards for their sphere. Likewise, on the insurance side, you have insurance agencies who have formed consortia, who are defining APIs. I was at the FinTech Mexico Festival earlier this year, and I spoke to these two groups, and they are ready to go. They have APIs published. They are looking forward to providing those capabilities to banks and FinTechs alike. That is a pathway towards open finance. So you have a lot of the pieces in place today. You just have to find a way to bring those pieces together. I mentioned at the beginning that open banking is all about standardization. Can I go back? Yeah, I can go back. So standardized APIs, that's the big box surrounding the data provider side. That is the magic that makes open banking happen. The reason is because standards provide a number of built-in benefits by their nature, any standards. Consistent interfaces that ease usage and integration for all participants, interoperability across an entire ecosystem. Because of the standardization and consistency and interoperability, you lower the costs of what is ultimately a commodity function, making it easier for everyone to play, and rather than each of you spending millions of dollars on your own, you can just leverage this work that is being done by a common standards body, giving you foundational capabilities to support future innovation. These are the benefits that you get by supporting common, open, shared standards. They are the fertile soil upon which future technology is created. So what do you do now? What can you do starting today? Leverage the organizations that already exist. As I mentioned earlier, you already have a bunch of pieces in place. In fact, where is Paco from Banorte? If you could, I don't know, I don't see him, but yesterday I was talking to a gentleman from Banorte who was talking about there already being a consortium in place to support the detection of fraud. So you have the banks cooperating already with some regulatory presence. You have organizations today that you can start to expand into open banking standards bodies and open banking accreditation bodies. Create an open space for collaboration where you can have difficult conversations with players on either side of the supply and demand chain. Open the kimono, as Paco from Banorte said, and let those difficult conversations happen. That's how you make progress. That's how the Brazilians achieved enormous progress. That is the difficult work that both Abraham and Don did in their respective organizations. You're going to hear more about that. Establish rules that both sides can agree on. So have those arguments, yell at each other, but then decide, look, these are the things we can agree on. We can agree on reciprocal access. We can agree that there should be liability for both sides of the open banking coin. Have those conversations and come to agreement. It's not impossible. It's been done all over the world, even in the US and Canada, your North American friends. Clearly define mandates and targets. So once you agree on those rules, figure out what it is you're trying to achieve with open banking for Mexico. Is it inclusion? Is it increased competition? Is it driving down costs for existing financial products? Is it innovation? Figure out what those mandates are and figure out what the targets are, measurable targets that you want to achieve to detect when you've been successful. And finally, establish that supervisory commission. You've got the law. It already includes a mandate. To establish that purpose-built commission, you just have to do it. And to get to number 5, you just have to do 1, 2, 3, and 4. I don't mean to trivialize it. It's not going to be easy, but the steps are there. As you go into this journey, what are the lessons that you're going to learn from other regions? 1, learn the standards from other places. You do not have to start from scratch. There's tons of amazing work that's been done all over the world. Look at it, learn it, cut and paste it. Don't hesitate. Most of these places, they want you to cut and paste the work that they have already done. 2nd, balance data privacy and data function. There's going to be a lot of voices out there saying, wait a minute, is this safe? Absolutely, there are going to be new risks introduced by creating a data sharing ecosystem. But ultimately, you're supporting existing consumer behavior. You're trying to create an innovative environment. So how do you allow those consumers to do those things, but still make it safe? 3rd, that government and market balance. Find a way for government and market to cooperate. Make sure you are not on either sides of the aisle talking through lawyers. Create a space where you can sit together, yell at each other, and come to some agreement. Fourth, shift your mindset from closed to open. I'm especially speaking to the incumbent banks out there. There are benefits for you, things that you may not currently see. You can get to customers that you can't get to today. You can introduce products that you can't introduce today. To do that, you have to start thinking in terms of an open ecosystem, because that's where your consumers are today. Fifth, understand that this is inevitable. Most consumers already use 6 to 7 different financial management apps on their phone. They bank with multiple institutions. You can try and keep that genie in the bottle, but it's not going to work. And if you don't figure out how to do this in a safe way, it's just going to be done in an unsafe way, which is what's happening right now. So understand that this shift is inevitable and start moving towards the goal. Lots of things can go wrong. I introduced this slide at last year's Cellcom event. I've used it in many presentations since. It's a big hit. It's, of course, Hideo Kojima's Great Wave off of Kanagawa. It's a famous painting because it's not just a single wave, it's waves within waves within waves. And I love it as an analogy for open banking because it's sort of problems within problems within problems. You should expect these challenges. It's not going to be smooth sailing. Don and Abraham are going to talk to you about some of the challenges they've seen. Expect ongoing standards volatility. This is not a one-time build. This is version 1, version 2, version 5, version 7. There's going to be disagreements about the scope of what those standards cover. There's going to be evolving security considerations and new security protocols that come along that you have to support. Overly complex accreditation systems are going to be challenged by fintechs who say you're keeping me out by making it too hard for me to join. Expect those debates to happen. And generally, interoperability and versioning challenges, which perhaps you're all familiar with internally, suddenly become external. Are you backwards compatible? Are you compatible with standards that might exist in other regions? How does this work with standards in other spheres like payments? Those are going to be challenges as well. All this to say, this is not a one-time build. This is a journey. This is going to take time. It's going to take years, and it's not going to stop. You're going to do it once, then you're going to do it again, then you're going to do it again. Look at some of your Latin American partners and see how they're doing it, and you'll understand those challenges. That's normal. That's how this is going to go. So expect it going in. So where do you go from here? If there's all these things that can go wrong, why am I doing this in the large, right? What am I trying to get to in terms of an end game? That's sort of the most exciting part of all. Open banking is just the beginning. Already I described how open banking is evolving into open finance by expanding the standard to support specifications and data domains beyond just retail banking, such as wealth, insurance, etc. But it doesn't stop there. We are moving towards open data, where that same idea of consent-driven data sharing based on standards is moving into telecom, government, healthcare, etc. But it doesn't even stop there. Eventually, this idea of you being in control of your data moves into a world that some call OpenX, where you start to see things like open social, open commerce, open search, the ability to take your social graph, pick it up, and move it to another provider, the ability to take your search history, pick it up, and move it to another provider, or decide that you don't want it to exist at all and have that data deleted if you so choose. Control over your own information. That is the end game here. And open banking is the thin end of that wedge, a wedge that in the end ultimately changes our relationship to our information and our relationship to each other. A world that I like to call open everything. I love that term because you can read it two ways. You can read it as a noun, like open everything, all these open systems using standards to allow consumers to control their data. But you can also read it as a verb, a challenge, as in I challenge you, owners of these closed systems, to open them up, to allow that data to be shared by the people who own it, to the benefit not just of them, but to the benefit of all of us. Now, when you're working on this stuff, it can sometimes feel a little weird, a little strange, a little mysterious, like you're wandering around in the dark. But in that darkness, a door has opened, and it's the door to the future. And just like everywhere else, the future of Mexico is open. Thank you. There should be a final slide, but thank you. I'm Mr. Open Banking. Oh, there it is.